Good evening, and welcome to the Crypto Overnighter. I'm Nikodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on a Monday, April 10th, 2023. According to the Sunday Times, the Bank of England is planning to create a team of up to 30 people. These people will be responsible for building a central bank digital currency. In February, the Central Bank and Finance Ministry of the UK announced that they were conducting more research and development on a digital version of the pound sterling. The public was invited to give their opinions on the plan, and the media calls the project Bitcoin. But the bank has not confirmed whether a digital pound would use distributed ledger technology. Apparently, the bank is not a big fan of the name. Now, the bank's careers page lists two new positions. These are named, imaginatively enough, Digital Pound Security Architect and Digital Pound Solutions Architect. They were added at the end of last month and pay up to 80,000 British pounds. That's around $99,000 a year US. In January, the Treasury advertised for a head of central bank digital currency. The Sunday Times quoted Ian Taylor. Now, Taylor is a board advisor for Crypto UK, and he said that the bank's team of 30 people is a significant resource to focus on the digital pound. It shows that the bank is serious about the project and demonstrates the impact that it could have. And now, even more concerning, we've got news from the International Monetary Fund, and it is our cover story for tonight. At the IMF Spring Meetings 2023, the Digital Currency Monetary Authority announced the launch of an international central bank digital currency. Now, their claim is that the CBDC strengthens the monetary sovereignty of the participating central banks and that it follows recent IMF crypto assets policy recommendations. The CBDC is called the Universal Monetary Unit, and it's symbolized as a U with the two dots on top, umlaut. Now, legally, UMU is a money commodity. It can transact in any legal tender settlement currency. It functions as a CBDC to enforce banking regulations and to protect the financial integrity of the international banking system. Banks can use SWIFT codes and bank accounts to transact cross-border payments over digital currency rails with UMU digital currency wallets. This bypasses the correspondent banking system and settles in real time at wholesale foreign exchange rates. Tobias Adrian is a financial counselor. In an IMF interview, he said cross-border payments can be slow, expensive, and risky. He suggested a multilateral platform that can improve cross-border payments, transform foreign exchange transactions, and financial contracting. This platform would help counterparties in different jurisdictions offset the lack of a common settlement asset and common rules and governance. Daryl Hubbard is the executive director of the DCMA and chief architect of the UMU. Hubbard said that the IMF's vision is the exact solution the DCMA is delivering to central banks globally. George Walker is an international law partner at Paxos LLP. He facilitated meetings between the DCMA and the IMF. He says that although the IMF hasn't officially endorsed the newly minted currency, they haven't objected to their foreign exchange premium rates or monetary sovereignty approach. According to Daryl, UMU doesn't aim to disrupt the international monetary system. Instead, he claims that it strengthens the system by helping the IMF provide economic and financial stability to member states. Several sovereign states have collaborated to draft the Universal Monetary Unit model law legislation. The proposed legislation does not allow UMU to become legal tender for domestic prices or international trade agreements. Instead, it is a complementary monetary commodity to store value, mitigate against potential currency depreciation, and tendered as payment currency at the time of settlement. Merchants and trading partners can accept UMU for the equivalent market value of their goods and services priced in any national legal tender. UMU's wallet has premium exchange rates and can convert any settlement currency amount to the equivalent UMU amount. Universal Monetary Unit is a cryptocurrency designed to support central banking and regulated financial institutions. It uses a trusted consensus protocol, the staked proof of trust protocol, and a multidimensional distributed ledger capable of supporting any asset or liability ledger. This enables full-service digital banking and international trade payments. The DCMA is a global organization for promoting digital currency and monetary policy innovations for governments and central banks. Its membership includes sovereign states, central banks, commercial and retail banks, and other financial institutions. Now, pay close attention to this one, folks. No good will come of this. They're saying right now that it's not for domestic markets. How long do you think that's going to last? The nature of governments is to seek and maintain power. No government would let this potential go untapped. And for sticking with me so far, I'm going to take just a moment to ask you to like, follow, and subscribe to the Crypto Overnighter podcast. It makes a huge difference in drawing attention to the show, so thanks. In the past, I've talked about FTX. Some of the crazy stuff we've heard out of that firm since its Black Swan event last year includes things like running the company off of consumer-grade home accounting software. And it seems like this rather slapdash attempt at accounting belied the immaturity of FTX's executive team. But maybe there was a purpose behind it. Maybe the intent was to make things at FTX so confusing, so convoluted in terms of finance, that it presented a Gordian knot meant to confound regulators attempting to untangle the company's finances. Here's what I mean. John J. Ray III is FTX's new CEO. His job is to guide FTX through the restructuring process. And he's done this before. He led Enron through its restructuring. Now, on April 9th, 2023, he submitted an interim report on the firm's operations to the U.S. Bankruptcy Court of Delaware. This report gives an update on their recovery efforts and the challenges they have faced. And I'm here to tell you, this report gets ugly. In his report, Ray stated that the debtors faced unusual obstacles because of FTX Group's inadequate record keeping and control in critical areas. The report also provides more information about FTX's management, including their lack of clear record keeping and inability to maintain exchange security, which means that the debtors have found it challenging to recover funds due to control failures, among other issues. The report notes that the FTX Group's failure is unique. It's unique because of the magnitude of harm that it's caused in the industry in its infancy. However, the root causes of the failure are familiar: hubris, incompetence, and good old-fashioned greed. The 45-page report outlined FTX's daily activities, and in doing so, it revealed that FTX was a web of parallel corporate chains under Bankman-Fried's ultimate control. The report also showed that FTX's CTO, Gary Wang, and engineering director, Nishad Singh, held significant control over the company's operations. Both individuals have already pled guilty and are assisting authorities in legal proceedings. Now, Ray mentioned that employees faced negative repercussions after disagreements. These repercussions could include reduced bonuses or even sudden termination. This, of course, had a chilling effect on any opposition of any kind. The report cited one instance where the legal counsel instructed FTX president Brett Harrison to apologize. He was ordered to apologize to Sam and Singh for raising concerns. Instead, Harrison refused and eventually resigned. According to the report, SBF and other top officials made jokes about losing track of millions of dollars in assets. The report quotes Sam as saying, quote, "We sometimes find $50 million of assets lying around that we lost track of, such is life." The report also claims that FTX kept few or no records of daily trading activities, loans, and transactions with sister companies. The report noted that key documentation, including executed loan agreements, intercompany agreements, acquisition and investment documents, bank and brokerage account statements, and contract and account information of all types, they were incomplete, inaccurate, contradictory, or missing entirely. The report revealed that FTX's organizational structure lacked dedicated financial risk, audit, or treasury departments. The report indicated that key executives such as chief financial officers, risk officers, and auditors were missing in some or all critical entities. Furthermore, the exchange demonstrated complete disregard for cybersecurity and the safety of user funds. They reportedly held most of the funds in hot wallets, which is just insanity. They allegedly lied to their customers and third parties about their cold wallets. Now, hot wallets are connected to the internet via third-party clients. They are less secure than cold wallets, which store encrypted keys to cryptocurrencies offline. As per bankruptcy filing norms, Ray's interim report is the first of many reports to provide an update on the financial condition as well as the progress made in recovering funds. Ray stated that they've recovered $1.4 billion in digital assets and have identified an additional $1.7 billion that they're in the process of recovering. Meanwhile, Sam faces trial on October 2, 2023. His charges include fraud, defrauding the Federal Election Commission, and allegedly bribing a Chinese government official. Last week, Paxos' hopes of obtaining a national banking charter came to an unfortunate, bitter end. The stablecoin issuer had applied for a new bank charter in December of 2020. That application expired on March 31st. Nearly 2 years ago, the Office of the Comptroller of the Currency granted Paxos preliminary conditional approval for the company's application to charter Paxos National Trust, New York. This allowed Paxos to divide its operations between two entities, with one being regulated on the national level and the other maintained its current regulatory structure. After granting approval, the comptroller gave Paxos 18 months to execute its business plan. This approval allowed Paxos to custody both dollars and crypto, offer its stablecoin services across the country, and operate an exchange at the national level. Paxos' current New York State business is unaffected by the expired application for a national banking charter. That said, they do have the option to file a new application. A spokesperson said, Paxos will decide what to do next soon, and this could include applying for OCC oversight again. The Office of the Comptroller of the Currency is the bureau responsible for chartering, regulating, and supervising national banks within the U.S. Treasury Department. Paxos' banking ambitions have come under scrutiny in recent months, with rumors surfacing in February that the OCC had asked Paxos to withdraw its application for a national trust bank charter. Paxos is currently dealing with the actions taken by state and federal regulators. In February, the Securities Exchange Commission notified Paxos that it was investigating BUSD. Additionally, the New York Department of Financial Services instructed Paxos to stop issuing BUSD altogether. Paxos has reportedly stopped minting the BUSD stablecoin as per the order. Brian Armstrong is the CEO of Coinbase. He said that Coinbase may add the Bitcoin Layer 2 scaling solution Lightning to the cryptocurrency exchange. On April 8th, Armstrong tweeted that Lightning is great and that they plan to integrate it. This was in response to a tweet criticizing him for not paying enough attention to the network. Now, Armstrong did not give any additional information on when or how Lightning would be integrated into Coinbase. Coinbase and Binance have been criticized for not adopting the Lightning network, especially given that it produces quicker and cheaper Bitcoin transactions than the Bitcoin-based network itself. David Cohen is a Lightning supporter. He created a GitHub repository that suggests Coinbase would become one of the largest trading platforms to adopt Bitcoin. That is, if Armstrong follows through. Now, Cohen had previously mentioned that adding Lightning may go against the business plan of many platforms, as they prioritize integrating more altcoins and following market trends. Even so, Bitfinex, Kraken, and OKX have already integrated Lightning. Coinbase has been focusing more on the Ethereum ecosystem and launched Base on February 23rd. Base is an Ethereum Layer 2 application network that is powered by the Layer 2 Optimism. In January of 2016, Armstrong wrote an article called Scaling Bitcoin. In that article, he stated that he would support solutions for scaling Bitcoin. He said that he hoped to encourage progress and see a solution sooner rather than later. The Lightning Network celebrated its 5th anniversary last March. Hong Kong's finance secretary is Paul Chan. And Chan said now is the time to embrace Web3. He says that it's true even with the ups and downs of the crypto market. Chan wrote a blog post on April 9th to explain his position. In that post, he proposed 3 major directions in Hong Kong's budget. One of those directions was the development and use of Web3. Chan wrote that Hong Kong wants to help Web3 grow steadily, and to do so, they will have to have a strategy with 2 parts. One part is proper regulation. The other part is promoting development. Hong Kong wants to focus on financial security. They will also focus on teaching investors, protecting those investors, and fighting against money laundering. Last October, Hong Kong's government talked about making a bill to control crypto. Then, on February 20th of this year, the Securities and Futures Commission released their plan. That plan is for a new way to manage crypto exchanges, and it will start in June. The crypto industry has been going through a rough time. The market is bad, some exchanges have failed, and all of this means that regulators are looking more closely at the industry than ever before. Even so, Chan would tell you that this is normal. He says that the internet had the same problems in the early 2000s. And I do see a lot of the comparisons, especially around browser wars, but that's a topic for another show. At any rate, after the major problems were corrected, people were more relaxed. And Chan says that the same thing is going to happen with crypto. He thinks that when the market is less crazy, when things calm down, that's when the important people in crypto will start working on innovation, practical uses, and making value. I think he's off on his timing. I think that's what's happening right now. They're not waiting for the market to get better. They're building now. Hong Kong's way of managing crypto is different from the United States. The US is more strict. Some people think that the most important firms and talent in crypto will move to Hong Kong from the US because of this. One exchange, Gate.io, has already said that they're going to start doing business in Hong Kong. Christian Hui is the Secretary for Financial Services and the Treasury. He said in a speech on March 20th that Hong Kong has gotten attention from many crypto companies. He said they've been interested since October of 2022. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or even a review. And in the meantime, we'll see you tomorrow night.